This is Short Hammer. It is the 30th of October, 2019, and we are taking a look at Tesla. Now, if you see Tesla was on a mean run, I think. It went up massively, and we are having a slight pullback right now. And what happened was, for me, I just saw it run into one of our zones. It also closed the gap. So if you look at these shaded areas on Tesla, for me, these are my supply demand zones. And I use those zones to enter and exit my trades. And I use these when I see the 4 hour setups, depending on market conditions, they're either the perfect entry for swings, or I use them as setups for my intraday trading, because the higher time frame, when you look at the zones, are usually more powerful. So let's go down to the 5 minute chart and take a peek at how we traded Tesla today. Let's see, where's our 5? Here we go. So Tesla yesterday, we played it, but the bottom from yesterday was 322.50-ish. It was like 322.60. This area here. This area happens to be the beginning of a zone. It also happens to be the quarterly pivot. You see this purple dash line here on Tesla. So when Tesla hit this area yesterday, we bounced and we went back to the 330 area, rejected, and we closed right here in this 327-ish, 326-ish zone area here. So what I was waiting for today was, when we were going down pre-market, my expectation when I saw this push up here around 326 was that we may get a retest of this 329 by 330 area. And I wanted to get short here to ride this down. Now, if I got short up here, because I had two plans. My first plan was to get short at this 329 by 330 area. If we closed above and I saw bullish candles, I'll be closing the trade and potentially looking for a long entry on a retest and hold of this area. If we went below it, then I would already be short here and I'll be riding this down. But if, let's say it went above and it closed above and I saw bullish candles above and I exited the trade, I would be waiting for another setup, either a pullback and hold of this area and a break above the previous high that was set on the initial candle formations, a break back below retest and get short for failure, and then an exit on a break back above the previous bullish candle formations and ride that to the downside. And my first exit would probably be this pre-market consolidation. The second option I had was, if it went down to the 322 area, is either, if we saw bullish candles off of here, is to buy with the previous day's low as my stop. If we hit here and we saw bullish candle over candle over candle, basically higher lows and higher highs, get long back into this consolidation area as my potential first exit, or back up to the 330s, depending upon the trend of the market for the day. And we actually ended up breaking under, and this was another entry, and the back test of this previous day's low, also the top of our zone, also the quarterly pivot. This was our entry short. And the exit would have been, if we had bullish candle formations above this, I'd be out. And so we took this down. And the mistake that I made was I got in on the push up. So when it dropped, I got in on the push back up here through the 322 area, got short and faded it to the downside. My exit should have been, the first exit should have been around 318, which is the previous day's main daily intraday pivot. Or that should have been my exit. And it wasn't. I actually got out after I entered at 322.50-ish. I actually exited right around the 320, right around this area here is where I exited this trade, right in here somewhere. Between 319.70 and 320.15 is where I exited that trade. And it wasn't a bad trade, but I exited too early and the execution was slightly off. Should have rolled that all the way down to this level here. And that should have been my exit. There was no reason to get out as far as before that, because there's just no reason. And but I did exit, and it was a green trade, and that's what's important. But I didn't capture the full move, and I also didn't stick to my plan. And the usual execution should be, if you're in one contract, you get out at first contact. So if that first contact is previous day candle formations, previous lows, previous levels that you see from previous days, or if it's the pivot strategy, whatever strategy that you're using, my exit is usually first contact of, if you have one contract, I'm out of that one contract. If you have multiple contracts, I'm out half or 25% at first contact with resistance to my move. And then the rest I will set for break even. And if it continues to progress, then now I set the stop at the previous level where we had slight resistance or slight resistance to the move. And so I exited. And I kind of got tied up in a few other things in the morning. But what I should have done was, on this pullback through here, I should have gotten short on this pullback. And then my stop should have been this pre-market consolidation. I wouldn't wait for this high. I'd have to wait for this consolidation, which is probably about $1.50 or so above. That would have had to be my stop. A close and bullish formations above this would have to be my stop. But on this push back through, I should have gotten short, waiting for candle over candle. This push through was my opportunity to fade this move, and I did not. And also, if it pushed back through and then on the pullback, it held the swing low of the pre-market, that would also have been a opportunity. If I saw it hold this and then I started to see consolidation and bullish formations below this, that would have been a concern for me if I had faded this pop. But I did not fade that pop. And that was actually the true move. I actually have a buddy that got short around this 318 area, but he just felt that it was going to go down. So this ride back down, he averaged on the pop, and then he took some out on this ride back down through his area, and then he got in again here, and he rode it back down again using this as his stop. But that was my Tesla trade. There are things I could have done a lot better as far as execution on this, but usually, even if your execution is a little bit shaky, if you work on perfecting your entry, you can usually still exit green, especially if the setup is good. It's all about the setup. Like, everything else is really irrelevant. Like, just make sure you enter on the proper setup and proper structure. And if the thesis is good, even if you get squeezed out, you just keep following it and looking for another setup, and just keep adjusting your plan. But the execution is everything.